So from here, we see more of a positive outlook. Apart from that, today morning, China has further reduced their lending rate. For 5 year, they had reduced it by around 25 basis point. The expectation of reduction of 20 basis point. And also 1 year also they had reduced by 25 basis point. The expectation was of 20 basis point. So higher than expected, and that is supporting the metal prices in today morning, wherein we are seeing copper and iron and steel are up by almost around 1.5%, 2%, 1.5%, and aluminum is up by almost around 2.5% as compared to the prices while equity market closed on Friday. So overall outlook seems positive for Indian market. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. Today, market is likely to open on a flattish note, and we are likely to witness some sort of a range-bound trading session. Friday, it was a very good day of a recovery basis. We have seen Nifty has recovered from 24,570 towards 24,800. Above that level, we witnessed a positive closing, which gives some sort of a relief sign on the technical front. Now, going forward, as of now, 24,770 will act as a crucial support level for today intraday purpose. As long as it sustains about that level, we are likely to witness a recovery rally, which might take Nifty towards to 24,930 to 25,100 marks on the higher side. If it's failed to sustain that support level, 24,770, then again we can witness a second round of a profit booking towards 24,700, 24,600 levels on the downsides. I must say that it's definitely a stock specific market, so one should remain a stock specific market. Will continue its volatile trading session in the coming few weeks as well. Coming towards the Bank Nifty, 52,500, 52,740 are the crucial resistance level we need to keep eye on it, whereas the support is placed at around 52,000, 51,770. Coming towards the Fin Nifty, 24,140, 24,340 are the resistance level, whereas the support is placed at around 23,580, 23,220 levels. Stock specific, NIIT Limited looks good on the technical front. This particular stock is really doing very well from the past few trading sessions, well placed above all the important moving averages. The interesting point that it is forming a symmetrical triangle formations, and it's on the verge of giving the breakout of the same, which comes with around 170 levels. Any more about 170 levels, we are looking for a target of 178 to 180 levels on the higher side. So one can take a long positions by maintaining a strict stop loss of 164. That's it from my end. I request derivative team to take the call forward.
Yeah, thank you, Swati. On the derivative front, the cost of carry continues to remain high, and that is a slight cause of worry. It should reduce going forward. Other than that, PCR below 1, VIX below the 15 levels are comfortable, and nothing to worry from the open interest front as well. So all in all, we expect buying to return as the cost of carry reduces. 25,000 level is a resistance area with the highest call base now around the same, but considerable amount of put base is also around the 25,000 levels, indicating the put writers at 25,000 feel that the closing or the expiry would be above the 25,000 level, and that way they are not liquidating their positions. So that is again a positive sign. Once we close above the 25,000 levels, we can see 25,300 to 25,500 levels coming in Nifty going forward. From the stock specific front, life insurance stocks seem to have made a good consolidation bottom, and some short covering was seen in most of the stocks, specifically in SBI Life and HDFC Life. Both the stocks can do well going forward, so yeah, look out for the same. Along with these, ICICI Pru and ICICI GI can do well as well. So yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Good morning, everyone. On Friday, Tata Consumer Products Limited posted the result, which is marginally below expectations. Revenue grew by 13% on a YY basis. EBITDA margin remained stable at 14.9%, which grew by 50 basis points, and the profit reported at 392 crore, which grew by 12% on a YY basis, mainly due to lower tax rate, where the company set off losses on the merger of 3 wholly owned subsidiaries. The management indicated that while rural demand is recovering, it is still unlikely to deliver the double-digit volume growth, and food inflation is a major concern in urban market, and hence demand is expected to be soft. India beverages segment grew by 3%. Organically, it has declined by 4%, where the tea volumes declined by 4% on a YY basis. Company commented that tea and coffee prices has continued to increase, where it has seen tea prices were up by 30% in North India, and the company has taken price increases to offset the higher input cost. India Foods revenue grew by 28%. Volume growth was at 1%. The company has taken 2% price increase in the Tata Salt with effect from October to mitigate the impact of higher input costs. International business recorded 7% revenue growth, where it has seen 5% growth in constant currency. Here, it has seen the profitability has improved by 53%. The stock is trading at a PE of 54 times to FY26 EPS. We continue to positive on the stock on the back of expected growth opportunity in the packaged foods business. Polycab India had hosted the con call. As discussed earlier on the result side, it has seen the strong growth of 30% revenue led by performance across verticals, and margins have seen the decline of 290 basis points. It has seen on both the verticals in wires and cables, margins were reported at 12.3%. This was mainly contracted due to the competitive intensity that it has seen in the quarter. So it has seen it had to increase the prices in line with the industry leading players. That has seen the impact of 30 basis points on a sequential basis, and on a YOY basis, it has also seen the impact of higher freight charges and the lower contribution from the domestic distribution business. In the FMEG vertical, margins declined due to higher advertisement and promotional spends and fixed expenses. The management has guided operating margins for cables and wire segment in the range of 12 to 14%. And on this capex side, it will continue to maintain the run rate of 10 to 12 billion of annual investment over the next 2 to 3 years. The stock is trading at 44 times to FY26 EPS, and we are long-term positive on the company. Rosari Biotech Limited posted the results. Results are okay. Revenue grew by 3%. Company's HPPC division is up by 6% on a YY basis, while the textile business is still facing the challenges where it has seen the decline of 12%. And in the press release, it has mentioned that the management is expecting a recovery in the next calendar year. AHN business remains stable with 17% growth on a lower base of Q2 of FY24. Operating margins are stable at 13.2%. The stock is trading at a PE of 24 times to FY26 EPS, and we will provide further update post the con call. Thank you.
Good morning. Tech Mahindra's Q2 numbers were ahead of expectations. Numbers showed broad-based improvement. Revenue grew 0.7% constant currency basis on a quarter-on-quarter basis. EBIT margins at 9.6% were also above expectations. Last quarter, they were 8.5%, and a year ago, they were 4.7%. PAT looked elevated due to higher other income on account of asset sale. The new deal TCV came in at $603 million against $534 million in the last quarter. After 5 consecutive quarter decline in its main vertical of communication, this quarter, this vertical saw growth of 2.7% on a quarter-on-quarter basis. With rate cuts on cars, company sees revival in the spend from the telcos going forward. Stock is available at fair valuations of 23.4 times its FY 26 expected earnings, and any dip in the stock price, one can accumulate the same. Thank you.
Good morning. One IPO will be opening today. The name of the company is Wari Energies Limited. Details of the IPO are like issue size is around 4,321 crore, fresh issue is around 3,600 crore, and OFS is around 721 crore. Company propose to utilize the net proceeds toward part finance the cost of establishing the 6 gigawatt of ingot wafer, solar cell, and solar PV module manufacturing facility in Odisha. IPO price band uh, is rupees 1,427 to 1,503 per share, and the market cap post issue will be 43,179 crore. Talking about the company, Wari Energies is India's largest solar PV module manufacturer, now well positioned for growth with its 12 gigawatt capacity and expansion plans in wafer and cell manufacturing. Government incentives and reduced reliance on Chinese imports support its business outlook. The company's backward integration into solar cell production will enhance profitability and operational efficiency. With a strong 16.6 gigawatt order book and advanced global manufacturing facilities, Wari is set for long-term success. If you look at the peer comparison, then Wari is leader in the solar PV industry with revenue and its installed capacity far exceeding its peers. Its impressive revenue CAGR of 80% shows strong growth potential. With a superior ROCE of 39.9%, Wari appears attractive compared to its peers. We believe Wari is available at substantial discount to its peers with EV by EBITDA of 25.4 times compared to 87.5 times for peers and P of 34.9 compared to 116 for peers. Even on the EV by gigawatt installed capacity metric, Wari Energies appears attractive relative to its peers. Thus, we recommend to subscribe to the issue. On the result front, Kotak Mahindra Bank posted the result marginally below expectations on the back of decline in asset quality. NII grew by 11% year on year and 2.6% quarter on quarter. Credit cost came at 0.6% versus 0.5% year on year and 0.6% quarter on quarter. Slippage ratio at 1.88% versus 1.39% quarter on quarter. 30 to 40% of slippage in quarter two is from credit cards. GNPA came at 1.49% versus 1.39% quarter on quarter. NNPA came at 0.43% versus 0.35% quarter on quarter. Advances grew by 15% year on year and 2.5% quarter on quarter. CD ratio declined to 86.6% versus 87.2% quarter on quarter. PBP grew by 11% year on year and declined by 3% quarter on quarter. The regulatory embargo impacted the unsecured retail book, especially in credit cards, with a dip in market share to 11%. The bank, the bank anticipates continued pressure on credit costs due to customer over leveraging in certain segments. The NIM for the quarter fell by 11 basis point to 4.91%, driven by shift toward lower yielding secured loans and reduced disbursement in unsecured retail loans. Kotak expects strong performance in its subsidiaries like Kotak Securities and Kotak AMC to continue. Both businesses recorded significant growth in quarter 2 FY25. The bank is optimistic about recovery in its secured retail portfolio and expect better performance in the second half of FY25. especially from the rural segment and secured asset recoveries. So the overall outlook for Kotak Bank is neutral. HDFC Bank posted the result in line with expectations. PAT grew by 5% quarter on quarter. GNPA came at 1.36% and NNPA came at 0.41%. NIM came at 3.6%. Credit cost came at 0.4% versus 0.6% year on year and 0.5% quarter on quarter. Slippage came at 1.2% versus 1.3% quarter on quarter. Uh, Loan book grew by 1.3% quarter on quarter. CD ratio declined to 100.8%. The bank believe it is not possible to reduce the CD ratio significantly. Uh, it will take 2 to 3 years. LCR is at 128% this quarter, and the bank is aims to range between 110% to 120%. So the outlook is positive in the long term for HDFC Bank. RBL Bank posted the result below expectations. Advances came at 15% year on year and 1.4% quarter on quarter. Net interest income came at 9.5% year on year and declined to 5% quarter on quarter. NIM declined to 5.04% versus 5.67% quarter on quarter. Credit cost came at 3% versus 3.7% year on year. And gross NPA came at 2.88% versus 2.69% year on year. C8 Limited hosted the con call on Friday. So company's EBITDA margin stood at 11.1% with gross margin at 37.5%. Margins were impacted by raw material cost increases, particularly natural rubber prices, which surged by around 6% uh, in quarter 2 over quarter 1. C8 implemented price hikes 2% for truck bus radial tires and 3.5% for passenger car tires in response to rising raw material cost, with further hikes extended in November and December. OEM business faced challenges with single-digit decline driven by slow vehicle growth and a temporary loss of share. Company expects significant growth in electric vehicle segment. The company already has 30% share in the electric two-wheeler segment and 25% share in passenger vehicle EV tires. And company expect double-digit growth in the replacement and international business for the second half of FY25. The company gave capex guidance of around 1,000 crore for FY25. So the overall outlook of C8 Limited is long-term positive. Thank you.
Good morning, everyone. We attended the con call of Jindal Stainless. The results were kind of okayish. The standalone offtake came at 565. Uh, it was down 2.25% quarter on quarter, and it was up 3.86% year on year. It was down quarter on quarter owing to weaker than expected demand recovery in export markets. EBITDA per ton came at 21,536, up 2.74% quarter on quarter, down 4.86% year on year. Uh, the company has maintained export market share during the quarter, but they say that the headwinds persist. But the domestic market is expected to do well, especially in automobile, infra, railways related sectors. The Indonesian nickel facility has commissioned ahead of schedule. Company became a preferred vendor for BrahMos cruise missiles and for HAL. Company said that it will soon be applying for anti-dumping duties on dumping from China and Vietnam into India. Company expects good tailwinds for long products and it expects volume to pick up. Uh, Company has brought down their volume growth guidance for the current financial year due to export market not picking up. It has brought down to from 20% to 10 to 15%. EBITDA per ton guidance is given at 18,000 per ton for the current financial year. Company is expected to have better H2 in domestic market than H1, especially the premium side of business. The stock is currently trading at 9.4 times FY26 EV by EBITDA, and due to the current environment, we are currently neutral on this stock. Hindustan Zinc also hosted a con call. The refined metals sales zinc came at 198 in thousands of metric ton, down 6% quarter on quarter, up 7% year on year. And silver came at 184 metric tons, up 10% quarter on quarter, 2% year on year. Saleable silver production for the quarter was 184 million ton, up 2% year on year, and quarter on quarter 10% up because of pyro plant operations on lead mode during the quarter, partly offset by lower silver output from SK mine. Total revenue from operations during the quarter increased 22% on account of better metal and silver volumes, and zinc and silver prices further supported by a strong dollar and marginally offset by lower lead prices. It was up 2% quarter on quarter on account of better lead and silver volumes, partly offset by lower zinc volume and metal prices. EBITDA for the quarter increased 33% year on year, 6% quarter on quarter, in line with the revenue from operations and the cost of production. As far as project updates are concerned, project for the new progress for the new 160 KTPA roaster at Debari and the 510 KTPA Hindustan Zinc fertilizers plant project is on track with final commissioning target by Q4 FY25 and Q2 FY26 respectively. Site work for Bamnia Kalan mines is under progress. Company is bullish on metal prices because of the recent positive global economic developments. Demand is India is going to remain robust. Silver prices have risen globally, but domestic silver prices have fallen because of the cut in basic custom duties on silver. Company has kept its cost and EBITDA guidance intact. And it said that the government divestment plans discussions are ongoing. The stock is currently trading at 12.7 times FY26 EV EBITDA. And given the overall situation, we are marginally positive on the stock. Thank you.
Yeah, that's all. Request commodity team to take up from here. Harshal, if you
Yes,
can.
sir. Thank you very
Yeah.
much. Yeah, good morning, everyone. So in today's session, we have witnessed already a gap up opening in metals due to the China news, and we are expecting further buying to continue. Gold, one can expect prices to test 78,500, 78,600 on the upside. Wait for a dip around 78,000, and one can initiate a buy with a stop loss of 77,700. And silver heading for the 1 lakh target. Uh, Prices are opened gap up. Wait for a dip around 97,500, and initiate a buy with a stop loss of 96,500. On upside, 99,000, 1 lakh is the target we are eyeing for. In base metal, copper, also buy around 828 levels with a stop loss of 823. On upside, it is expected to test 840. Zinc expected to test 290, 291 on upside. So buying on dips around 287, 286.50 is recommended with a stop loss of 285. And in crude oil, there should be a pullback. One can initiate a buy around 58.30 with a stop loss of 57.70. On upside, the resistance area is 58.20. So one can book profits around these levels. And in natural gas, 188 should hold as a support. 188 to 187 should hold as a support. So there could be some pullback till 200. And one can maintain a stop loss of 180 on downside. That's it from us. Thank you very much.